All right, everybody. Um, Welcome back. Today we are going to be taking a look at two different chapters. They are very short, quick and easy, and simple chapters. Okay, so the first half of the class, I'm going to be spending the time to do chapter 5, and then when we come back from the break, we're going to go ahead and spend the rest of the time to do chapter 6. So here we have bank reconciliation for chapter 5. Okay, now for this, it's an easy concept, but we also have to understand this as well. So I have to kind of bring it back to you and explain what a bank reconciliation does. Now, oftentimes when we record our checks or we record our deposits, our number one thing that we need to always check is, do we have enough money in our checking account? All right, especially when we make our deposits and especially when we write our checks out, because we also have to assume that the minute we deposit our money, it doesn't clear right away. Okay, nowadays, especially if you deposit your money during the off hours of business operations, most likely it won't clear the next day. And we also have to think about national holidays too, because those also affect the timing that things clear. All right, same thing with the check as well. When we talk about writing a whole bunch of checks, the only way that our check would clear is if the other person who receives the check deposited it into their bank. And of course, as we know, a little context here is that every time we write a check, it's not required for the person to deposit it right away. They have up to anywhere from 30 to 90 days. I believe 90 days is depends on what it is. But I believe 90 days is the maximum, or 60 days is the maximum that the check can be valid for. Okay, so with that being said, oftentimes, and it's happened before, common mistakes is that oftentimes, if there's too many people that are dealing with accounts receivable or accounts payable, they make that little mistake where they receive the payment, but they either leave it in their desk and they say, oh, I'm going to take it to the bank at the end of the day, or I'm going to take it to the very following morning, and they forget. So that's very common, especially when you're dealing with multiple checks at one time. You know what I mean? And then sometimes it's more convenient, instead of every time you receive a paycheck, or a check in general, not a paycheck. Every time you receive a check, it takes time to have to run it to the bank and deposit it. So that's why sometimes they even make it more convenient, where they make a certain days to make the deposits, or they wait till the end of the day to make their deposits. So same thing here. So it applies based on that. So knowing that we have this idea where on our end, we do our bookkeeping, right? If we keep track of every single deposit that we've made, and we keep track of every check that we've written, we also have to assume this. Well, what actually went through and what actually did not go through? And because with the whole given idea about the customer, or I'm sorry, not the customer, whoever is on the receiving end of the check, it depends on when they deposit, when they receive it, right? And oftentimes and then if they deposit on the weekend, the bank is closed on the weekend, so it doesn't even clear until the following Monday. Same with idea too. If there's a holiday on Monday, you're not expected to get it processed until the Tuesday. So there's a lot of factors and a lot of things that affect why we need to make our bank reconciliations. So a bank reconciliation basically just allows us to compare our bank statement to our actual checking account, right? To see if we match our our accounting, as well as making sure that we keep track of what all the checks that we've written and all the deposits that go through. So with that being said, bank reconciliations are not the only thing you can reconcile. You can reconcile almost anything that is and have a register. So as you can see here, you can, if you read right here, you can recycle almost any other current assets, any liabilities, and also any equity. So in this case, any account that has a register. All right, and as we know ourselves, right? Ideally, you can reconcile your sales and your expenses, but then at the end of the day, what we know about the expenses and the income is that they close out at the end of the year, or at the end of a given period. So that's something that you're not going to really reconcile as much often as you would for other asset. I'm sorry, the other account types, right? Your assets, liabilities, and equity. Okay, but most common ones that we normally do are going to be your bank reconciliations and your credit card reconciliations. Reason being is because they provide monthly statements. All right, and that is very crucial because, for example, if you have a money market or a savings account, you don't get monthly statements for that unless you are actively involving in it or have to request a statement for it. But in this case, the most common ones that we're going to be looking at is going to be a bank reconciliation and a credit card reconciliation. So with that being said, let's go ahead and dive right in and take a look at on page 144. So here is a perfect example of a copy of a recent bank statement. So in this case, we're assuming that we're in 2019. So this bank statement is as of January 31st of 2019. Notice that, let's look at the information here. You're going to have a beginning balance. You're going to have all your deposits, all your checks that you've written, and then you're going to have an ending balance. All right. Other things that you will find on your bank statement are going to be a list of all the transactions that occurred. So all the checks that been deposited, a list of all your deposits and all the checks that have been written, as well as any interest that you've collected, right? Because we do charge interest to our customers. And then as well as any charges that the bank has processed for us. So, for example, we have bank service charges because, we use the bank to collect the money for us, or we use the bank to print checks for us. They're going to tack us a little fee for using the bank for a service. Okay. So here's a perfect example of what a typical bank statement should look like. Right, it should give you the date of when the statement is for, and it gives you the beginning and ending balance of that month. Okay. So with that being said, that's always going to be the first thing that you're going to have to collect in order to conduct your reconciliation. Now, here's also a good thing to know as well. Oftentimes, your reconciliation won't happen until the beginning of the month. Reason being is because you want to make sure that you complete the last day, right? Once the last day is the last day, right? That's when you should be able to request a statement. But oftentimes, like they never send it to you before the date, because then it's not going to give you a true reflection of your statement. Okay, it's always at the end of the month, and usually you receive it within the first week of the first week of the next month. So with that being said, our first and foremost thing that we got to make sure and double ensure is that making sure that anything that we have in our bank accounts, right? We need to make sure that two things. We need to make sure that all of our checks in our deposits have cleared, or I'm sorry, if that we made all the deposits in there, okay? So as you can see, I went to my deposits, there's nothing in there. So absolutely nothing in there. All right. We need to also ensure that that was when we go into our checking register, we need to ensure that that on January 31st, right, that the check number 6004 was my very, very, very last check that I've written. Nothing, no checks came in before or came in after, okay? So you want to make sure all those things hold true, okay? And what you're going to do here is we're going to go ahead and look in our banking section in our home page, and we have this button called Reconcile, all right? Alternative way to do that is by going up here to the banking menu, okay? And we're going to go ahead and click that reconcile button up here, or let me see, banking reconcile. Okay, since I'm already here, I'm going to go ahead and click that. Now, the first thing you want to ensure is that which account are you actually reconciling? All right, and as I've mentioned before, right, when we take a look at our reconciliations, we can reconcile almost anything that's an other asset, or an asset, liability, or an equity account. All right, we can do it all. So make sure that you are in the correct one when you are doing, making sure that you're in the correct account for the ones that you are actually going to reconcile. So in this case, we're reconciling the bank. So I'm going to go ahead and make sure that my checking account is selected. All right. The next thing here is going to ask you, well, what date are you going to reconcile this on? It's going to be the date that you reflect on your statement. So in this case, my bank statement that I have in the book tells me that it's for January 31st of 2019. So here I am, January 31st, 2019. Now, rule of thumb is before even beginning your reconciliation, you always need to double match and double confirm that the beginning balance in your checking account matches your beginning balance in your bank reconciliation, or your bank statement, excuse me. So here in my checking account, I have started out with $14,384.50. If I go ahead and check my bank statement, and I check my beginning balance, I too have a $14,384.50 beginning balance. Now that is a good sign because that means when we did our previous bank reconciliation, it matched on both ends. So with that being a very crucial piece of information, again, if you, for any reason, this number does not match, then something has happened in the past that you've made either a change, or you voided a check, you did something to cause a discrepancy in your records. All right, so make sure this must hold true. This must match the beginning balance in your bank statement, or else you have to locate that discrepancy, or you need to make sure that you calculate that difference and look for that discrepancy, because again, that's the whole purpose of a bank reconciliation, is to make sure we match our income and expenses. We gotta make sure that the amount of money that we deposited is reflecting in both our checking and our bank accounts. Okay. So with that being said, now that we know that it is matching, then we can go ahead and proceed on to the next step, which is entering in the ending balance. So in this case, my ending balance says it right here in my book. I have an ending balance of $54.24.92. So 54.24.92 is what I'm going to type in my ending balance. This is what I'm supposed to be ending or matching, okay? Oftentimes, you definitely want to look to your bank statement because your bank statement is going to reflect the most accurate or the most current value. And on top of that, the bank is most likely to make less mistakes than, someone who is just an accountant. They're not a bank professional. And on top of that, they're not like a legitimate company that's in charge of this, right? So whereas a bank, right, they have to do and make sure that they're on their end, that it's correct on their end. And it's very unlikely that they will make a mistake. All right? Very unlikely. But that doesn't mean that they don't make a mistake. Okay? So with that being said, now that I've filled that part out, now the next question is to fill out what is on my bank statement. So of course there's two things that on our books that we don't record, right? Because we don't know about it. On our end, we don't know that the bank is actually charging us money, nor do we know that the bank is also collecting money for us, right? We know in the back of our heads, but we don't know how much just yet. So that's why the bank statement is very important, because it tells you, hey, don't forget, we also charged your bank account for service charges. We charged your bank account. But see, that's the thing. You're going to have to go into your bank account to be able to see this. Because again, your bank charge could be either a flat rate, or it could be a, a variable, right? Let's say, because you never know, right? This charge right here could be due to someone who had a bounced check, and you don't know, you can't predict it. So that's why you need to have your bank statement, because it will tell you what they charged you and what interest you've collected. So in this case, my first thing is I'm going to look at my financial charges. In this case, I got charged $10 for service charges. All right. And I'm going to go back to my my QuickBooks here, and I'm going to go ahead and associate that right here. Service charges was for $10 even. All right. And when did I get this charge? It says right there on the date in your book. It tells you the date was as of January 31st. So there you go, January 31st. Now in this case, you need to have this account set up, and it's going to be bank service charges. So bank service charges. Okay, it's an expense account, right? Because we had to pay this fine. And then the class is going to be overhead. It does, because our bank account, right, does, there you go, overhead. Our bank account, right, is universal. It belongs to both San Jose, and it also belongs to both the Walnut Creek location. So in this case, overhead is going to be one of those classes that allows us to say it doesn't belong in either or. Okay, so there you go. So now let's go. The next section here is we're going to be looking at the interest that we've earned. So in this case, we know this as interest income. So let's go ahead and take a look at my bank statement. How much interest did I earn? Here it tells me I earned, as of January 31st, I earned a total of $8.62. Okay, so I'm going to go ahead and type that in, $8.62 as of January 31st. And my account is going to be interest income, right? This is money that I've earned, and it's a revenue, right? Because we've earned it, interest income. Okay. And again, because it doesn't belong to either store locations, we're just going to go ahead and associate this class as an overhead thing. Okay. So now that we've completed those main questions here, we could go ahead and click the continue button to proceed with the reconciliation. So notice this. Now it's a grid of all these transactions that occurred as of from January as of today. So notice this. We have transactions in February that exist here, right? Now, one way to be able to filter this out in case you're doing this later on in the month, like let's say you're doing this in the middle of the month of February, which isn't highly recommended. You should do this as soon as you know, or at least the first couple days of February. But in this case, I'm doing this retroactively. So with this being said, I can actually filter out my information by going up to the top of the window. I have this little filter button that says hide all transactions after the statement date. So that means after the statement date. So if my statement date is as of January 31st of 2019, anything that happened after January 31st, I'm going to hide them. So notice this. If I do this, if I click on this, a couple of my transactions just actually were disappeared, right? My February 1st and my February 7th transactions actually cleared out. All right. So now I'm only left with anything that happened before my statement date. So that's why I have a couple checks here that are written out from December. That's fine because it's before the statement date. Right? So now what we're going to do is we're going to go ahead and compare our bank statement to our information here in QuickBooks. We are going to check off and we're going to click off the ones that we see that in our bank that it has cleared. Okay, so then it's making sure that we check mark and compare. Did the check that I wrote out in December, did that clear yet? And we are going to use the bank statement to confirm that. Okay, now before I do that, I'm going to go ahead and make sure I explain this section for you right here. So notice this. My left side column is going to be a list of all of my checks that I've written, where the right side of the column is going to enlist of all my deposits. Okay, and then notice down here at the bottom of my table here, I have my service charge for $10 already included. I also have my interest earned included, and I have my ending balance to be the $5,424. Now notice this. I also have cleared balances. I have an outstanding cleared balance of $14,383. Making a difference between the two is that I have a difference of $8,958. Our ultimate goal is this needs to be zero. Because then it will tell me that my bank has matched the ending balance in my that my checking account and my bank, they both balance if I have no discrepancy. Okay, now understanding this is so where our end goal is to match the ending balance of the 4224.92. That is the goal. So for us, we're going to compare our statement and we're going to compare our checkings and we're going to check mark which ones actually have cleared. And as we do that, it's going to actually recalculate our difference. So our end goal is we need to find this $8,000 difference. So now we can go ahead and take a look at this. Let's go ahead and take a look at all the checks that have cleared. So going over here, so the checks that have cleared, so it's going to be the bottom section here. Checks that are cleared and other withdrawals. So let's take a look. Did my check number 325 has cleared, 326 has cleared, 327, 601, 603, and 604. All of those checks have cleared. So in my side, what I'm going to do is I'm going to check mark off all of the ones I just read off. So we just talked about this, right? We said check 325 cleared, check 326 has cleared, 327, 6001, 6003, and 6004 has cleared, right? And notice this, every time I check mark something, my now my difference balance has dropped down to 4,000 or negative 4,000. So that means I have to keep going because I still have this $4,000 discrepancy, or I still have to find the remaining of these $4,000. Okay? So now that we did all of our checks, now the next thing is we got to see which deposits actually cleared. All right? So oftentimes, a rule of thumb here is when you write checks too close to the end of the month, usually they take anywhere to a couple days. Or if, let's say, the 31st was on a Saturday and you deposited money on the Saturday, it won't clear until February 2nd or 3rd because it's the weekend. So you have to understand that. So here, my deposits, okay, I have a total of 3 deposits that cleared in the amount of $249, $1,950, and $1,177. So let's go ahead and go into my QuickBooks and let's compare. Did my deposit for $1,950 clear? Yes, it did. Did my deposit for $249 clear? Yes, it did. And then lastly, did my deposit for the $1,177 clear? Yes, it did. So now that I've checked marked which deposits actually went through to the bank, let's go ahead and compare now. We still have $8,000 discrepancy. Okay? And here on our window here we have a check, and then we have one that we didn't write anything on. We did something on the 22nd. All right? And it's worth that $8,000. Now, before we could go ahead and just check mark that off, we need to make sure that it matches our bank statement, because we need to locate what we did in order for that $8,000 to be gone. So let's take a look. Anywhere on here, do you see something that is for $8,000?
Yeah, your other withdrawals.
Yes, other withdrawals. That means it says here we did a transfer. So that means we withdrew from the company a total of $8,000 on well, in this case, it cleared on January 31st. So there you go. We found our $8,000. It's right there. It was a withdrawal. So if I go ahead and click that $8,000 withdrawal right there, boom. Now my difference is 0. My ending balance and my cleared balance is the 4,000 is the 5,424.92 cents. So because we have a difference of 0, that means we did our bank reconciliation correct. All right?
Okay.
And that's it. That's it. And then all you have to do is click now. Once I get my 0, I can go ahead and click on reconcile now. Okay. Once I click that reconcile now, I'm going to get this little window here. It's producing this information, and then boom, it now tells me, well, what would you like to do next? Would you like to have a summary report, a detailed report, or both? In this case, let's go ahead and take a look at both. Okay. And you can print out your bank reconciliation slip too. So here it gives me this error message. I'm going to click don't space out. Okay. So here you go. I have my bank reconciliation summary report and detail report. So this one pretty much tells me all the checks and payments that have cleared out, etc., etc. So that's a report that's important because it allows you to not only verify that your bank is evened or it is correct and your accounting is correct, but it also tells you for the next time you do another bank reconciliation, it will go ahead and verify that this is the new beginning balance. So I'm going to go ahead and click that X out, and here's the detailed one, a little more specific of which checks cleared and which deposits cleared. All right, and okay, so pretty straightforward. That's what you have to do every given month, because the most important thing about having a checking account is you need to make sure you have enough money in order for you to pay your bills off, and making sure that you're doing your duties to deposit the money that you're supposed to be receiving from your customers. Okay? Any questions in regards to the bank reconciliation?
No, I don't have any.
Okay? Now, the next section that we're going to be talking about, well, what happens when you do find that discrepancy, or you find that you have that missing number, or it's just not balancing out to zero. If for any reason that you do have that, right, I'm going to go ahead and show you this right now. If I were to do that, let's go ahead and go visit that reconciliation again. What's going to happen is if you ran the report and it did not balance, what you can do is you can undo the last reconciliation. Okay? Or you can run a locate discrepancies. So first thing they usually say is you're going to actually undo the last bank reconciliation. Okay? And I'm going to go ahead and continue. All right, and I click OK. So I'm undoing it from what I did previously, right? And then I'm going to go ahead and click on that locate discrepancy report. All right, this is where you need to go to first if your beginning balance did not match from the very beginning. All right, you need to go ahead and locate that discrepancy, and by running a report, you might be able to find it by maybe there's a voided check there, maybe there's a check that's deleted, etc., etc. So what we notice is that check number 6002 doesn't even exist. It doesn't exist in our books. It doesn't even exist in anywhere. So what happened to my 6,000, my check number 6002? It must be voided, it must be canceled, it must be deleted, or no one deposited, or we never sent it out. All right? So that's what you're going to do. You're going to do a discrepancy report, of course. Since let me see, if I were to go to all transactions, I don't have any because I didn't create the scenario where I should have a discrepancy at all. And on top of that, my bank reconciliation went through perfectly. But that's what you're supposed to do. You're supposed to go ahead and do that, or go check out the previous reports, okay, of your bank reconciliation, all right? And you want to make sure that that's why we run these reports, because it ensures us that means the next time we do our bank reconciliation, it should be, the beginning balance should equal this, all right? But in this case, I don't have, so also fun fact here too is that when you're doing bank reconciliations, if you have Premier and Enterprise or Accountants, you should be able to look at all of your bank reconciliations for prior years, okay? For me, since I'm using Pro, I'm only able to see the most recent, or up to 1 month's worth of bank reconciliation. So I can only see, so in this case, since I undid my reconciliation, I can only see December right now. But once I did my reconciliation, I can only see January's reconciliation. All right. So that's a downside for me, but that's a fun fact for you too, because that is important to know that. So then, when you do consider getting a QuickBooks or understanding how it works, on the limitations that you have for a bank reconciliation. So again, all right. Now notice this, because I've actually, since I actually undo my last reconciliation, what's gonna happen is now that I'm gonna repunch in my numbers again. So 54, 24, 92, right? For this case, I need to know this because I punched it in the first time. I don't need to punch in an additional fees or any interest because it's already in the system. When you undo your bank reconciliation, you're only undoing the initial, not the initial step, but the check marking of all the checks and the check marking of all the deposits. All right. Everything else, because we've already entered it in, it's going to appear. So if I go ahead and redo my reconciliation, so I could continue, notice this. I have my $10 bank fee right here, and I have my $8.62 interest right here. So now it's already considered in the fact that it is there. All right. So I'm going to go ahead and try to just go ahead and redo my reconciliation real quick. So I have all of those. I had a $8,000 withdrawal, and I've had all 3 deposits. So here now my balance is 0, so I'm okay. So again, in case you do find a discrepancy, let's say I didn't select this one, right? And I locate that I have 1177. What I can do is I can click this modify button, and I can go ahead and locate the discrepancy. So it will bring me back to this window if I need to modify anything. All right. So it's not like you have to cancel the whole reconciliation in order to get to this window. All you have to do is, if you do see the discrepancy here, you can click the modify button, and it will take you back to this window for you to go ahead and run your discrepancy reports. Okay. And then, of course, now that I've did this and everything looks good, I'm going to click OK. And then, of course, you're going to get this message, and I'm going to go ahead and process it. All right. Then I'm going to get that window that tells me, okay, hold on, something's going on. Cancel, never mind. I forgot, I need to select that and then complete it. All right, and then I'm going to close. So that's how you do a bank reconciliation. All right, any questions?
No, I think I got that.
Okay, all right. So that's pretty much majority of this entire book is just how to do the bank reconciliation. All right. We're also going to go ahead and take a look at how to do a credit card reconciliation in a second. Okay. So again, I talked about finding errors during your reconciliation. We explored the options that you can do. Right. You can either undo the last reconciliation or run a discrepancy report. Okay. So here is where it's going to say, well, what happens when we have bounced checks? Wow, that's a huge factor here, because again, oftentimes your customers are not perfect. They can send you a bunch of checks And, if they are not really good at their accounting, they can accidentally send you a check and it bounces. It happens, okay? So now that we know, how do we handle it? Well, what happens is that one thing that you're gonna be responsible for is that once you get a bounced check, your only way of knowing this is if you set up notifications, right, from your bank to you. If you have them notify you, send you a letter, or send you an email, whatever it is. If you have them notify you every time a customer has sent you a bad check or something like that, then that is absolutely great. It's wonderful. Okay. But oftentimes, the bank won't tell you. The bank won't tell you unless you tell them to tell you. Okay, so and then on top of that, you won't know what they charge you until you find out on your bank statement. Okay, and it's true. If you don't set up those notifications, you would go on your day and you wouldn't know that that when they try to process a check, it bounced right then and there. Okay. Now, some if you go to the bank directly and you try to deposit it, they'll tell you right then and there if you're standing there. They'll let you know that the check did not clear. Okay. Or because they run it through the system and it bounces, they'll tell you immediately when you're there. But if you're doing this as a deposit like through the machine outside of the ATM, because now you can make those deposits now, it's gonna take the check and it's gonna read it, and then it's gonna accept it, and then when the bank opens the next morning, that's when they process it, and it's not gonna show you right then and there. It's gonna say, oh, sorry, we accepted a bounced check. So with that being said, oftentimes, if not most all, you will get fined. Okay? Cruel world as it is, because you're making a deposit and it's not even your fault. It's not your fault that you deposited someone else's check and it bounced, and yet the bank charged you because they tried to process it. They wasted their time, so they're charging you as the vendor for sending in a faulty check. All right? And of course, with that comes out of our own pocket, right? So this is what is going to happen when we come into play when it comes to the point where a customer sends us a faulty check, what we actually do about it. So in this case, Mr. Bob Mason, okay, he actually sent us a bad check. So let's go ahead and locate his check. So you can locate it either using the Receive Payments button, and I believe they tell you to go ahead and just click the back button, and you'll see the last thing should have been him. All right. Other ways that you can locate this is if you go to your customer center, right? Because you never know, you might have to go back a few times so you can locate the exact check that was bounced, right? So in this case, they tell you directly it's going to be the last one. But you could be spending hours just clicking that back button just to locate that check. The easiest way to do is go through the customer center, select the person, because the bank will tell you whose check did not go through. And then you're going to locate the customer and you're going to locate their payment and click it from there. Now in this case, it's already convenient. It's right here. Mr. Bob Mason, he wrote us a check for $11.77, and guess what? It bounced. There's only one way and one way only. To record the bounce check is at the top of the window. You have it right here that says record bounced check. Okay, so you need to get somewhere. You need to locate the check, or go to the customer payment window and locate the check, and then go ahead and record the bounced check. So once I do this and click on this, I get this bounced check window. All right, I'm gonna bring it down here so we can see it. a little better. So here it's going to say, well, how much did the bank charge you? We know how much the bank charged us. They charged us $10, and that's what showed up on our bank service charges, right? We got charged $10, and we paid it out of our own bank account, right? And for this, we're going to say that this happened as of January 31st, okay? So now where is this going to be taken out of? Again, it charged us based on the bank service charges, right? It's already in our bank service charges, okay? And of course, we're going to go ahead and, because this is an expense to us, we're going to say that because it's Mr. Bob Mason, he belongs to the San Jose, so that's where this expense is going to be located, right? It's going to be categorized under the San Jose, all right? Now, here's the fun part. How much do you want to charge your customer because they faulted on the payment, all right? Now, again, you want to be generous. You don't want to scare your customer away. So in this case, you can make up whatever money amount that you feel is necessary to penalize your customer for sending you a bad check. All right. Oftentimes, because hey, we only got charged $10, but that's just this bank. Other banks such as like my bank, Bank of America, I would get charged $50 straight up because I sent in a faulty check. $50. So that means I'm going to charge my customer at least $75 because that way it pays off the fine that I got charged for, and I also get to pocket some.
Mm-hmm.
So in this case, it's only $10. So I believe the book says that we're only going to say, hey, I'm going to charge you $20. $10 to pay for to pay the fee that I got charged, and the $10 is going to be for the convenience that I had to do because I deposited the money. Whatever reasons that you can justify your reasons for charging your customer, but you always want to make sure that you charge your customer at least to break even. You don't want to charge less than that, because then you're taking the fault for someone else's mistake. So in this case, I'm going to charge them $20. Boom. And I'm going to go ahead and click the next button. And the next button is just going to verify that this is what you want, and that it's going to be this. It's going to be tacked onto that. Okay. And then we're going to say finish. All right. Now we get that beep of approval, and now this is just our customer payment, right? So I'm going to go ahead and exit out of this window because now it says that we did this. What happens is because when we recorded the bounce check, what essentially happens is it undoes everything. It makes his check zero out, so that $11.77 that we deposited has now become zero because it's recorded as a bounce check. When that happens, that means the payment is voided, and that means we're starting back from he still owes us that $11.77. All right. So basically, the customer payment becomes voided. So now, a couple days later, Mr. Bob Mason decides to go ahead and pay us again, and this time he pays us a new check. So what happens once we assess that additional charge? Our duty is that we need to send him an invoice for that, basically a new invoice with the things that he purchased from us, as well as the tacked on additional fee. All right. But in this case, customer payment. So I'm going to go ahead and put in Mr. Bob Mason, and notice this. Once I click on Bob Mason, now it pulls out everything, including this $20 additional charge. And he wrote us another check. Okay. And I believe he wrote it to us as of February 8th. Oop. February 8th. And then, so here we're going to go ahead and check mark everything. Okay, so this one's telling us that we have to enter in an amount here. So in this case, the amount that he sent us was actually $1197 and 86 cents. Yes, so he sent us a check including the amount that we charged him for. So then now we can go ahead and check mark them that he made a payment to all of his invoices and including that extra $20 charge. Check. He wrote, yes.
Doesn't that mess up your reconciliation you did earlier?
Absolutely. Yes.
Okay.
It does because yes. But in this case, that's what happens. That's why it's important that you recognize your discrepancies and you locate anything that can happen. Because again, when we did our reconciliation, it happened at the end of the month. He wrote us this check at the end of the month and we deposited, and then all of a sudden it bounced back. All right. So yes, it does anything like this. So this is where you would have to run the locate discrepancy because of that check. But because we are now receiving another check, I believe this is check number 2538. Because now we're receiving another check, I'm going to go ahead, save and close. Now I can record that deposit right now. Okay. And once I do that, then I'm over by $20. Okay, but this is for now. This is because I received the check in February. Whatever I did for my previous month, I have to make sure that I remember that Mr. Bob Mason's check bounced and that I am, I have a discrepancy for $1177. All right. And then, yes. And then the next time I do my bank reconciliation, that's going to be where I'm going to start off is that I need to remember that I have that discrepancy. Okay. And what happens at the end of the day is when you do your February statement, because of your previous balance was deflected, what's going to happen is that now on your new bank statement, it's going to show up that you did that the check bounced, and it's also going to show that with the new for the new February statement, it's going to show what happened there. So yes. Okay. A lot of things is going to happen, but of course I don't have February for you to be able to show you what happens because we recorded the deposit, but that would normally happen. Yes. So again, here's his check, and I'm going to go ahead and save and close. So there you go. Now my deposit has gone through, and now my bank is $20 more happier, I guess. All right. So that is what happens when a customer records or a customer writes you a bad check. Okay. Now, of course, our customers are not as perfect either, and we are also not as perfect either because, of course, in our perspective, we too are the kind of person that, we're dealing with transactions left and right. And that's exactly why the very, very, the least that you should do is make sure you check your bank account at all times, every given time that you can. Because the most important thing is if you are piling a bunch of bills, you always want to make sure that you have enough money in order to write these checks. Because the one thing you want to avoid is actually also writing out an NSF check. And for their kind and for you sending a bad check, the penalties are a lot more higher than it is if you deposited someone else's check. You're gonna get fined a lot heftier than anybody else, okay? Because you're the one who wrote the check, and you knew that, or you're supposed to know that you didn't have enough money, but you wrote it anyway. So that's the idea here. On this page, you could go ahead and take a look at what you can do. So oftentimes, here's a list of the 6 things that you can do. If you know that you wrote a bad check, you should be responsible to call your vendor and let them know that 2 things. You either say, hey, you go run to the bank and you make your deposit and say, hey, go ahead and process the check one more time. It should go through. Or the best way you should do it is actually void the check and send a brand new one. Because they're going to charge you regardless an additional fee, because again, you wrote the bad check and you sent it to them. Their bank charged them money, so now they're going to come at you and tell them, hey, your check bounced and the bank charged me money, so you need to pay for it. So that's the same idea here. Is oftentimes is you can sometimes get away with hey, I'm sorry for that. I just deposited money in the bank, so you're good to clear it now. Yeah. So that's one option. Or the best option is to void the check and just send a brand new one. Okay. But other than that, here are the 6 things that you can do to in order to make sure that your vendor or whoever receives the check is taking the proper measurements to go ahead and deposit the check, or you're taking the proper measurements to take care of the faulty check that you wrote. Okay. Any other questions?
No.
Perfect. All right. So we're gonna go ahead and take a look at actually doing a credit card reconciliation. All right, because there's a huge difference between when we're dealing with doing a reconciliation for the bank and doing a reconciliation for the credit card. So as usual, right, this is all, no matter when you own a credit card, they're going to give you a monthly statement, okay? And it's going to be a list of every single transaction that is on your credit card. So here on page 156, here we have the credit card statement from the National Bank Visa Gold credit card. Right? You get your account information, you get the date of when the statement was issued, and you also get your beginning balance, or your current balance they call it, and et cetera, et cetera. And you're also going to get interest collected. So that's always number one that you should always look for, is how much interest did they charge you. All right, in this case, they charged us, let's take a look. I believe they charged you $16.11 worth of interest, okay? This is, if credit cards are one of the ones that are the ones that take a lot of your money because of the interest, okay? And you always want to pay it off before they charge you the interest, okay? So again, here I have a current balance, all right? And it tells me here the list of the transactions that has happened. So here on as of the 7th, I made a payment to the credit card. I paid them for the full $2,152, and then I made a few credit card charges on the 15th and the 20th. So therefore, here it is, my credit card charges. So right now my current balance is reflecting at one that's 68.70 plus the interest that's charged. So now my new current balance is going to be 184.81. All right, just exactly how we entered in our bank reconciliation, you're also going to do it the same way as well. Okay, so you can click that reconcile button, because the one thing that you need to know is the first thing it is before you go ahead and proceed is your drop down menu. Yes. So you're going to go ahead and locate your National Bank Visa Gold credit card. Okay.
Hello?
So once you're there,
Hello? Yes, can I help you?
good. Just give me a second.
Yeah.
All right. So there you go. Sorry about that. So here we are. So now we're at the National Bank Visa credit card, right? So here your window's going to look similar / kind of different. The only thing is that you're not going to be able to earn any money. Obviously, it's a credit card. You owe them money. So in this case, all you need to know is that your beginning balance should be $2,152 even. So that's going to be your last statement balance. As you know, every time you have your statement, it shows you your last statement and it shows you your current statement.
Mm-hmm.
All right. So there you go. That should match on your actual statement as well. That you have that $2,152 as your previous last statement. Right? And then we're going to enter in our new statement balance. So in this case, we need to enter in 184.81 because that is my new current balance. 184.81. That's my new current balance. Okay? And then of course, we talked about the $16.11 of interest that they charged me, right? They charged me interest, so this is going to be interest expense, right? It's an expense to our company because, it's something that we had to pay because we decided to borrow a credit card, all right? And making sure that your statements match too. I didn't check that. It is for the statement for February 28, right? So here, statement date is as of for February 28. And then we can go ahead and click that next button. So as you can see, if you do find a discrepancy or your stuff does not balance, you can always undo the reconciliation and locate the discrepancy. All right, in this case, this is also overhead because a credit card applies to both locations. All right, and I'm going to click continue. So again, we talked about the things that happened. We had a transaction. We bought something on the 15th. Yes, we did. And we also bought something on the 20th. All right, and we also made a payment, right? We made a payment for the 2,152. So by clicking that, here you go, we are at 0. And that means we did good, okay? Now, of course, realistically, when you have a business credit card, you're going to have way more transactions than just 2. So, this is just a quick example that they wanted to show you. So, just like doing the bank reconciliation, it's the same identical for any other reconciliation. However, here's the difference. All right. Here's the little window that is the difference between doing a bank and a credit card is that it gives you the option to either or. 1, write a check to make a payment to your credit card right now, or enter in a bill to pay the bill, to pay off the credit card later. And in this case, we're going to go ahead and enter in a bill. And I'm going to click OK. Once I do that, it's going to automatically fill in the information for me because that's just what happens, right? I'm intentionally associating that I want to make a bill for my credit card. And this is where I was talking briefly about, I believe, one of the chapters we were talking about credit cards. here is the perfect example. Okay. So again, you're going to get those same two reports as well. I don't need them, so I'm going to go ahead and close them out. So now here's my bill. I'm going to enter it as if the day that we received it. So in this case, we received this bill. I'm going to say we received it in March, because usually you wouldn't receive it on the very last day. That doesn't make sense. Let's say I received it on March 3rd. Okay. And it's outstanding for the 8481, and here is the reference number. Now, rule of thumb, okay? Rule of thumb here. When you are entering in a bill, you're not going to enter it in for the full amount, okay? Especially when it comes to your credit card, because what's the assumption that you can do with credit cards? Do you have to pay the whole amount off right away?
You don't have to, but you can if you want to save on the interest rate.
Absolutely, it's recommended. But again, if you owe in the previous statement, we paid them a straight $2,154. Now, as a business, is that something that you can, or would you have $2,000 laying around? Sometimes you do, sometimes you don't.
Right.
So in this case, I'm going to say I cannot afford it right now because I have to pay my rent. I have to pay, I have this huge client that needs all these equipment. So right now I cannot afford it. So if that's the case, but you do, of course, your statement's also going to give you a minimum. You definitely have to pay at least the minimum. So what you can do is you can place the minimum here, right? And you can always modify the bill afterwards, right? However, the rule of thumb here is when you enter in a bill for a credit card, you're going to enter in the amount that you are planning to pay for, not what the statement is outstanding for. Okay? So let's say I'm going to make a payment. I'm going to make a $50 payment. Then I'm going to only associate $50 here. Okay? Now what's going to happen here is because I'm associating only $50, that means then when I enter this bill in, it's just saying that I only owe $50. I don't owe $184. But if I go into my credit card, it's going to still reflect to me that I owe $184 until I make my payment. Okay? All right. And that's the rule of thumb, and that's what they recommend you to do is if you are planning to enter in a bill and to make a payment to your credit card, you're going to enter it in for the amount that you plan to pay for it, not the outstanding amount. Okay, so in this case, I'm only going to pay $50, and reference number is usually going to be whatever is on the bill, obviously. So in this case, it could be any number. I don't know if they do give it in the book or not. I don't think they do because I think they skip over it. Let's see. And they do tell you to enter in the bill. They completely skipped over the reference number. Okay, so again, once you have that information in there, and again, I'm only gonna make a payment for $50, so then that's okay. That means you only owe the Visa payment for $50. And again, the great thing about QuickBooks is that once you do this, right? And let's say it comes the day that you're going to make a payment, right? And you say, you know what, I'm just going to pay for the whole bill. Then you can always go back and modify it. There's no, QuickBooks isn't black and white. There's a lot of gray areas that you can modify anything at any given time. And so for that example, right, let's say I do end up wanting to pay more than that, right? So I'm going to go ahead and locate my national bank here. So it says I only owe $50, right? If I go ahead and locate that bill, Okay, if I go ahead and locate that bill, so where is it, my bill here? I can change the amount to however much I'm actually going to make a payment for. Use the pay bills window to actually decrease this payable. All right, so I can always edit the information at any given time. Oh wait, shoot! I don't want to. No. Let's not exit the program. I just want to exit that. There you go.
I do.
Okay. All right. Yep. And then last but not least, we talk about bank feeds. Bank feeds are only if you plan on using QuickBooks to link up your bank account to do online banking. That's it. Any questions?
Really?
Yes, it's only used for online banking. Okay, because it allows, and then of course, that's just more sensible data that you're adding onto your QuickBooks, right? And that's where it becomes a little red flaggy because you're not only are you allowing access the internet to access QuickBooks, it accesses your bank account online. It also accesses all your customers' information with all their bank information. So that's just more reasons to have potential fraud or potential hacking because you're allowing the internet. Now they do say that Intuit is a more safer platform. They have a lot of safeguards and they have a lot of things like that. But with bank feeds, what it does is it allows you to get notifications. So for instance, when I've mentioned earlier, when a bounce check happens, it's going to reflect on your online banking. You can collect your statements through online banking, of course, and it just makes it that much easier to get connected, to actually connect your QuickBooks to your online banking to make making your payments for things a lot more easier instead of having to do electronic transfer or doing you know, what do you call it? Yeah, like electronic transfers. It just makes it a lot more easier instead of having to record that deposit or record that transaction. It does it for you using the bank feeds. But in this case, go ahead.
I was going to ask, I guess it works the same way as if I have online banking at home, that if I wanted to make a transfer from, let's say, checking to savings, and I tell it to do that, that's considered online banking.
Yeah, absolutely. Yes, absolutely.
Okay.
But this one is more geared towards you're using this with intentions that you're doing this or you're transferring money to another business, right?
Okay.
So essentially, that's what you're doing, right? When it comes to electronic funds transfer, you're making transfers either to another business and et cetera, and you're using the online online bank. Like, I mean, you could do it separate from QuickBooks. You don't have to use it through QuickBooks. They just want to make it a lot more easier for you to just do it all in one place versus go to Internet Explorer or whatever it is that you're using, and doing the online banking and then have to record it in QuickBooks after it's been done. Make sense?
Mm-hmm.
Where it could just be all done in QuickBooks. Okay, so that's just it. There is no real example I can show you just because it involves the internet. So if you click on bank feeds, the first thing it's going to do is it's gonna pop up a little window that has the internet, and it's gonna ask you to access your bank account information. And in this case, I don't have one because it's a fake business. So, that is chapter 5 for you. Any questions in regards to chapter 5?
I don't think so. You addressed those along the way.
Good. All right. So we're coming in perfectly up on time. So let's go ahead and go over the review questions. So review question number 1. All right, so select obviously the best answer. Okay. When the beginning balance field on the begin reconciliation window does not match the beginning balance on the bank statement, you should
C, locate the discrepancies.
yes. Locate the discrepancies, yes. I'm not gonna go the other answers just because okay. A, would you call the bank? No, that's an accounting error on your end, or either your end, or it will most likely not be on their end, so you wouldn't call the bank. Change the amount in QuickBooks to match the bank's amount. You can do that, however, you're just only creating more holes in your books. Yes.
Right.
Because you should actually locate where that missing money is. So instead of just adding the money in there, you shouldn't.
Yeah, if you got examined, that could look like fraud somewhere.
Exactly. Good. And then D, select the banking menu, and then select enter statement charges. This is when you want to charge your customers. So absolutely, why would you charge your customers when you're trying to find a discrepancy? So C is the correct answer. All right, number 2. Which statement is false?
A.
Okay, good. A is actually, yes, it's false. It says right here that you can enter in a bank service charge using the enter statements charges. We just talked about that. Statement charges is when you want to charge your customers. So no, obviously you can't do that. And then let's see, B, you can enter in bank service charges on the begin reconcile window. Yes, I showed you that in the very beginning, is that's what you would normally do. That's usually the first thing that you would do. C, you can enter bank service charges using the register transaction. So I did not mention this, but yes, before even computing the bank reconciliation, you can choose to enter in the information that you see on your bank statement. So if a bank charged you, you can go ahead and go directly into the checking account and update your checking before you go ahead and do your reconciliation. You just don't fill that section at that bottom where you enter in your statement charges there, because you've already entered it beforehand. And then D, you can enter bank service charges using the write a checks window. Yes, we just talked about. Yes, you can do that as well. All right, it's the same. Entering using the write a checks window and entering it in through the checking register is essentially the same thing. Okay. Number 3. Okay, when you find an erroneous amount on the on a transaction while reconciling, okay, correct the amount by
It's got to be D, because I don't remember anything about going to the banking menu and collecting and correcting the error.
yes, good. It's either B or C. Okay. Yes, it's either B or C. When we're dealing with this, okay, so let's just go ahead and go over some of the answers. So A, you would be selecting the banking menu and then selecting correct error. We don't ever see that. I did not mention that. I didn't even talk about that. So A is obviously going to be eliminated right away. B says double clicking on the entry and then changing the amount to on the transaction. Yes, you can. Remember, when it comes to transactions, you can modify them at any given time. So for any reason that you found that error in the bank reconciliation, you can locate it and you can make the modification right then and there. And then C, selecting the entry in the reconcile window, and then clicking go and changing the amount on the transaction. Yes. So if you remember, you can click that modify button and it will take you back to the reconciliation window and you can make changes there. So yes, either by performing B or C, D is the correct answer. Number four, to properly record a voided check from a closed accounting period, what should you do?
B.
D. Okay. All right, let's explore the options then. So, A, would you delete the check in the register?
No, I don't believe so.
No, and you should never delete it, okay? And then we're not even talking about deleting it, we're talking about how to void it. So, obviously, voiding and deleting are not the same thing. B, make a deposit in the current period and then code it to the same account as the original check. All right. Few things that you can and cannot do here. Okay. When you're dealing with a check that's voided, you can't use the same number. All right. So entering it in the current period, all right, wouldn't actually work because of the reasons of that whole you're trying to void it in the previous in a closed out period. So in this case, yeah, and then and it says right here you would delete both transactions in the reconciliation window. No, you wouldn't be able to do so at all. So even if you voided a check in the past, unfortunately, what happens is that it says the question is how to properly record it. Yeah, that's not going to work by recording a check that you want to void in the current year. That doesn't work. And then deleting it in the reconciliation. No, that doesn't work. C, find the check in the register and then select edit menu and then select void. Or D, change the amount on the check to 0.
You're not going to change the amount of the check.
Good.
So it's got to be C then.
Yes, right. We talked about voiding checks in some chapter ago. I believe it's chapter 2. Actually, either chapter 2 or chapter 4. When we're talking about voiding a check. The best rule of thumb is because you're looking at properly recording it in a closed out period, right? And we'll talk about what a closed period means. It means literally when you lock up and secure the file away and never touch those transactions ever again.
Right.
But for any reason that you do have a discrepancy, or let's say you need to void a check for any reason, the most proper way to do it is by selecting it, find it in the check register, selecting it, and either right-clicking voiding it or clicking the edit menu and voiding it, and then it will carry on to the, current period. Okay? So that's a few things that we have to take a look at, but you never want to enter it in the current period and then delete the transactions, right? Because we're trying to do something that's in the past, not in the present.
Okay.
All right. Lastly, number 5 here, which of the following columns cannot be displayed in the checks and payments section on the bank reconciliation.
Well, it's going to show your check number,
It's going to show you check number. Good.
date it happened, and what you did with it, who got paid. So it can only be class.
Absolutely, that's correct, right? And it gives you the date, obviously. It gives you who to pay, but it doesn't give you the class. So good. B, that's correct answer. All right, so that was chapter 5, and guess what? It is 3 o'clock. Well, it's actually 2:55. So I'll go ahead and, you know what, today I'll go ahead and I'll call break now. So let's please be back, let's say no later than 3:12. I'll give you a couple extra minutes there.